It's K-Shine again. So today I'm just going over how I traded. I did do my first video on how I see supply and demand. It was actually very, very long, and it was an old video that I did. My plan is pretty much the same, but I wanted to do one that was more short, sweet. It's not like a course. I'm not trying to explain anything like the first video. So um, if you watch the first video all the way through, I appreciate it. But this one just gonna be a better idea of what my edge is and how I look at the chart. I'm not getting into details about how I do this or why I do this or this and that. Like if somebody has questions, just leave it in the comments or something. Other than that, I am gonna go ahead and get into it. So we're looking at UJ. Um, this is live. I'm not looking to trade right now. The market's closed, which is good. I'm just showing how I look at the market, how I set up the market, and we coming and starting extremely fresh. And there's a little couple things that are new that I didn't do before, but I mean, you guys wouldn't really even know that anyway because I just started recording. Um, so the first thing I do when I come to the market, especially if it's a clean chart like this, um, is I go to the daily. So I said this before, but I'll say it again. So I use the time frame above to get market structure for the lower time frame. So what that means is I use the daily market structure to give me a 4-hour high, 4-hour low, and my 4-hour supply and demand. Now, I don't even trade 4-hour highs, lows, or supply and demand. I trade 1 hour, which would be 4-hour structure. Now, the reason I identify the 4-hour is because it gives me kind of like a bias or idea of why price is moving the way it is, why price might be looking to reverse, why it might be beneficial to take a counter trend trade here on my trading time frame, even for those reasons, and you'll kind of see as I go through it. So the first thing I want to do is I use a horizontal line for my 4-hour because those are ones that like price might not break this range for the whole week. So first I want to identify lows and highs, and I don't normally use this marker, but I'll do it just for the sake of it's my first time showing it. So I'll just start here because I see clear structure where it provided a chalk pattern, pushed below. So it created a low here, then a high, pull back, then it pushed lower, and I go by the wick. So wick lower, wick lower, wick lower. So after it breaks the low, I just keep going till the wick pulls back. That's what I consider it a retracement. So it pushed all the way down to here, retraced. Then it finally broke, wick, wick. Some people might be asking how I know it broke because I don't count just a wick as it breaking. It has to physically close, but you gotta remember, this is 4-hour structure. So I'm only looking for it to close on the 4-hour, and these are daily candles. So I kind of just know already that it closed below here because I know on the 4-hour it did something here. But for the sake of the video and doing my due diligence, showing my due diligence, I'll actually show. So this was the low. If we go to the 4-hour, you can see where price actually did close above it. So now I can go back to the daily and create my structure accordingly. So this was the low. Then price pushed back up, making a chalk pattern, and broke right here, and it push, push, push. So now price in an uptrend, pulled back, retraced, pushed, pushed, push, slightly breaking it. And I only know this because I've already set this chart up for the week. But again, I'll do my due diligence just for you guys. Come here, go to the 4-hour. Boom, you see the 4-hour closed above right here. Go back to the daily and continue our structure. It pulled back to here, and this is the high. So this gives me current structure. So current 4-hour, the current 4-hour high and low is here. So this is the low, this is the high, and then I'll go ahead and draw my supply and demand and stuff for it as well. So I'll go ahead and get rid of these now that I know where my 4-hour structure is. And remember, I use horizontal lines to identify the overall. I call this the overall time frame structure because it gives me an overall idea of why price is moving the way it is on the structure I'm actually looking to trade. This is my low. This is my high. I just like to put 4-hour because I don't keep all my stuff the same color, and you'll see as I put the market together more. And this was the pullback. I like the last candle here. I already know it's above 50%, but to check, some people use a Gannon box. I just use fib. Boom. This shaded part represents 50% and below. So as long as it's within the shaded part, I know that it's actually a good supply or demand to have. So for 4 hour, I do shaded blue, but with the yellow outline, and then I just put 4 hour in the middle. So I know it is a 4 hour demand that I'm looking at. Um, and then I do my market condition check. So for me, if market condition, I check the market conditions first of any pair that I'm looking at. Um, the way I check market conditions is by understanding that ideally I expect price to create a low, create a high. Well, in an uptrend, ideally I want to see price have a low, create a new high, pull back to the supplier demand once, and immediately push through. So that is what normal market structure looks like to me. So I give it strikes for certain things. So after it pulls up and then pulls back the first time, it gets one strike if it gets to the high and rejects it. Gets a second strike, it gets another strike assigned to it if it comes back and retests the supplier demand once it pushes away. And a third strike is if it does either one of those again. So right now, price has no strikes because it pushed up correctly and then came down. So this is the first test, and now it's starting to push away. If price was to push back down and retest, it would have one strike. If price was to push up here and then reject the high without breaking it, then it has another strike. Once price has three strikes, I consider that market conditions untradeable. My reason behind that is you got to remember the difference in supply and demand and support and resistance, even though they're very similar, is supply and demand is supposed to give you a more discrete opportunity, where support and resistance gives you an opportunity based on already formed market structure. So I'm using supply and demand, which isn't technically a support or resistance level, and I'm using that for my opportunity. However, if price starts rejecting this high and then coming back and testing this, and it keeps doing that over and over, it's making it not as discrete of an opportunity, which means everybody looking at the market can see it there. If everybody can see it there, that means the banks and the big players who can actually move the market, they see it as well. And when they can see those support and resistance levels, or when they see a supply and demand has been hit too many times, that makes you a perfect liquidity trap. Meaning that they can see where your stop losses, or where most people would put their stop losses, and they're like, hey, let's buy enough to snatch their stop losses, sell enough to snatch their other stop losses, and then we'll move in the direction. So that's why after three strikes, I won't even trade. Really, once it hits three strikes for market conditions, I won't even trade it. So these market conditions are good. This actually has zero strikes because it did what I ideally expect. It came low, came high, and now this is the first test. The first test doesn't count as a strike. Now, the second test and third test, they count as a strike. If it comes up here the first time and rejects, that counts as a strike. So that's kind of an explanation of that. So this is tradable, which means now I will go down to my actually trading time frame structure, which is the 4 hour. So the 4 hour, just like how the daily give me 4 hour structure, 4 hour is giving the 4 hour time frame is giving me 1 hour structure, and this is the structure I actually look to trade. So I'll start here at the 4 hour high, and I'll kind of look for where I can clearly see structure started. So I can clearly see structure create a high here, pulled back, and then pushed higher. So I will start from here. So this was the high, pull back, this was the low, this was the high, price pushed, but then came back up, kind of like a SD flip pattern. Probably is a SD flip pattern if we zoom in, but remember this video is not like a course or anything. If you would like to see me go in a little more depth on certain reversal patterns and things, I can do that in another video. But yeah, this didn't create new structure. It's internal structure, because this was the high, this low high, and it's not new structure unless it breaks the lower high. This is just internal structure. Then it pushes down, so it breaks the low, making this downtrending, pushes back up, and then pushes low again. Remember, this is when I have to check. See, now on the daily, I know more times than not when I see a wick below that the 4 hour actually closed, because you got to think it takes 6 4 hour candles to make one daily candle. On the 4 hour, it takes 4 1 hour candles to make a 4 hour candle. So I don't always know for sure if it broke and closed. So it didn't initially, but it did right here. So I would go back to the 4 hour and yeah, I would go ahead and give it to it. So erase this and erase this and just continue from where I left off. So we push down to here. This is our low. Pull back to here. Push, push, push. Bring it down some. Push, push, push. So the wicks continue all the way down to here. So price was downtrending, came up. Again, let me place this high here so I could go down to the 1 hour and see when it actually broke. So it didn't break on the first wick, didn't break the second wick, so it didn't break until here. And that's something that I can clearly see and tell. So now I go back to the 4 hour to define my structure. So I know that price, when it retraced to here, it came up here and did all this internal structure, but it really didn't break until here. So as of right now, I know this is my low and this is my high because it started retracing already. So what I want to do is get rid of all of this extra and to identify my trader. Now remember, this is my trading high time frame. So I have a high time frame, mid time frame, and a low time frame that I actually trade. This is the start of it. So I use the 4 hour time frame to identify 1 hour structure. So technically the 1 hour is my highest time frame that I'm trading because I'm trading the 1 hour structure, but I use the 4 hour time frame to define it. So I just use a simple horizontal array when I'm identifying 1 hour and below. And I identify those two. So this was the low, 1 hour. This is my high, 1 hour. Some people might say, don't you get confused? Well, this is why. So like if it's in an uptrend, I make sure the low is sticking out further than the high. Because if I just come and look at this, I say, oh, it's uptrending because this one is a little further out than this one. If it was a downtrend, it would be the opposite. So it would be sticking out like from here. In this one, it would have been here. The low would have been here. So you can see that, oh, this one's sticking out, so it's downtrending. That's how I keep up with it if I come to the market and I'm like, hold on, what the fuck was I doing? Or I'll erase it and start brand new. So just like I did with the 4 hours. So we got the 1 hour low, 1 hour high. Now we have to identify our supply or demand, which is going to be our tradable structure. Where did price break? So remember, this was the last high right here. So we literally draw the full demand. For 1 hour, I just have it shaded blue with a blue outline as well. So 4 hour is blue with the yellow outline. 1 hour is blue with a blue outline. And I also write 1 hour in there as well so I don't get confused. Then I check it with the fib, like we did the higher time frame. It does not fit within 50%. So now I need to look to refine this in some way. So looking at these candles, it's a lot of mess. So I really can't refine it to the last candle because none of the candles fit within the 50% range. So that gives me two options left. I could either just say F it and cut this supply and demand in half, which would be right here, and that falls within here. Or I can go to the 1 hour and look for the last candle on the 1 hour before it broke. So this was the last candle and it barely fits the 50%, but I like it. Even though it barely fits, I like it, so I'll refine it to there because it's around the same area that the 50% would have been anyway. So it's right at 50 though, but that counts, 50 or lower. So then I get rid of that, and this is my 1 hour demand. So this is where we get busy because I'm actually looking to trade. So again, remember, we got to check market conditions first. So this was the first, this was the low, this was the high, and it hasn't even pulled back yet. So this has no strikes against it at all. It's very tradable. What I'm looking for is price to pull down to here on the higher time frame, so on the 4 hour, and then I'll go to the lower time frame and look for reversal patterns. So I'm gonna just give an example, right? So let's say we're looking at this on the 4 hour, price pulls into here on the 4 hour. Then I want to go to the 1 hour, right? And I want to identify 1 hour structure. So this is the 4 hour pull, right? But on the 1 hour, it's going to look like this. It's going to look down, up, down, up, down, up. I'm actually saying that backwards, so ignore me. So that's what structure would look like on the 1 hour. similar. So I'm gonna get rid of, well, I'm gonna just move this one out. And I was gonna write on it, but you can't. So this is a 4 hour. This is what 1 hour looks like. It's the 1 hour is still the 4 hour, but where the 4 hour is just a retracement, the 1 hour. Well, where the 4 hour time frame, aka 1 hour structure, was a retracement, the 1 hour time frame slash 15-minute structure is actually downtrending. So what I'm looking for here is a change of character pattern. A change of character, simply put, is you see how it's creating lower lows, lower high, lower low, lower high. It's where market says, okay, instead of creating lower low and lower high, guess what I'm gonna do? Switch it up on you. This is a reversal pattern. So it clears the lower high, right? Once it clears that lower high, this is what we call a chalk, which means change of character. It means price on this time frame went from being a downtrending to potentially being uptrending if it rejects this supply. So once it breaks it, guess what? That created a level of demand here. And what I'm looking to do, what I'm looking for is I'm just looking for price to pull back to it. Once it pulls back to it, I'm trying to get in. I call this is a first pullback entry, or this is a first pullback reversal pattern. So what I would be looking for is to get in. I don't want to put price too, I don't want to put my stop loss too tight, so I give it a few pips below, in case it wants to try to clear liquidity from this demand zone and then push. Um, and I'm just riding it to the 1 hour high. You see, this is a 1 to 4 trade. I would let structure tell me when I should take partial TP, but I would be focusing around this midpoint area. Um, and that's it. That's how I look to enter. Some people might be saying, well, why aren't you looking to ride it to the 4 hour high, right? Because you're smart enough to kind of know that how market structure works. Well, I don't remember who said this. I can't remember for sure if it was Lucas or Q or Swaggy who I was watching, or it might have been Doyle too. Um, those are some of the people I watch and kind of look up to and stuff like that. But the reason I'm not pushing it here yet is because you got to remember, your job ain't to try to catch every turn and every move in the market. Your job is just to try to catch your leg, whatever, however good that is. Remember, my minimum is a 1 to 3. So literally just trying to catch this tradable structure right here is enough for me, because it gives me a 1 to 4 off gate. Now, once it gets to the 1 to 4, if it does so, I would probably take majority and then just let the rest of it run and see if it can make it there or not. But my first and main focus is just catching the high of this tradable structure. So remember, this is 15-minute structure on the 1 hour time frame. For my 15-minute supply and demands, or what I like to call my entry supply and demands, because I don't really use 15-minute structure or 5-minute structure for anything other than entries. I use 4 hour structure to give me an overall idea of why price is moving the way it is, and then I use 1 hour structure to actually present to me my trading range that I'm looking to trade within. But for my entry supply or demands, they're actually shaded in yellow with a blue outline, and then I will write it on there. So I will write 15-minute here. And yeah, I'm literally looking for a reversal pattern. And there's different types of reversal patterns too. So, and I'm not gonna get into that. Again, that could be another video. This is not a course. But I could have gotten a first pullback here. I could have gotten a SD flip pattern here. I could have missed this one. This one could have not pulled back correctly. And then I would have had to wait for an extra confirmation entry. But again, we're just using an example so I can show you guys the full way in which I view the market. So this is what I would be looking to when it gets to my 1 hour structure. And I'm just looking to catch this one little leg. Um, and see what happens from there. And yeah, that sums up how I view and see the market. It's not a whole lot. It's not something I don't use indicators really at all. The few that I will say that I use here or there is I do use moving average here or there. So I have the 20 and 50, which I use on a higher time frame. It gives me more of a high overall. And then I have a 8 and 14, which kind of catches those small intraday twists, right? And you can kind of see that. Like we're looking at the 4 hour, right? Um, the market red crossed over to green, and then it was followed by a big push. Like I said, I mostly use market structure and supply and demand, but if I'm a little nervous, I'm coming off a losing streak, and I just want that extra confirmation, I'll go to something like this. Like look here, the green just crossed over the red. Um, Price just switched from downtrending to uptrending, and as of this moment, now I'm more confident that if price pulls back here and gives me a reversal pattern, it is actually going to push up instead of situations where, you could potentially be getting tricked, and that's why I don't like indicators too much because indicators can lag and they can also trick you. And sometimes you can miss a move waiting for an indicator. So I'm not super huge on indicators, but that's really the only indicator I use when I do use it. More times than not, I take the moving average off and just go by market structure. But yeah, I identify my overall market structure on the 4 hour. So I know the 4 hours in an overall uptrend. So if price was all the way up here and it just started retracing, it would make sense why the 1 hour was in a downtrend. But price has made it to the 4 hour supply. So on my 1 hour structure, it would make sense that price has finally changed from downtrending to uptrending. And later on tonight, because remember, this is a live chart. This ain't no instant replay or nothing. This is the only pair I set up because I really don't show to set up my charts until between like 8 and 12. And then I stay up from like 12, 4 or 5 and see, what opportunities actually play out. So yeah, this is actually an opportunity I'll be looking at tonight. I'm looking for it to pull into this 1 hour supply somewhere. And then once it pulls into this 1 hour supply, I'm gonna go down to the 1 hour time frame and 15-minute time frames and look for structure there and look for a low time reversal pattern so I can get in and ride it to the high. But yeah, because I've set this one up, I'll actually go ahead and set my alerts. So when price is in between, like making its way to a supply or demand, where I put my alerts is I put an alert right at the supply or demand, so I know when it gets there, and I just say testing demand, look for low time chop. And I do this just to simplify it for myself, so I know what happened and I know what I'm looking for because of that happening. And then if here, and here I just put break structure high. And I'll give a quick explanation of why I don't have anything else or need anything else, not at this moment, at this current moment. Um, the reason I don't need anything else at this current moment is because these are the only two things that matter. Until price pushes to this opportunity zone, I don't even care about what it's doing because there's no reason for me to be trading until price pushes in here. The reason I set another alert up here is because the only reason I would no longer be waiting for it to just hit this opportunity zone would be if it breaks and closes above this point. Because if it breaks and closes above this point, I call it a structure reset. And by structure reset, I just mean structure has broken. So now I have to identify the new low, the new high, and the new supply and demand for that point. Now, if price doesn't test this supply and demand and then creates new structure, I will leave this zone here as an open zone. It kind of helps me identify when there's potential for liquidity grabs because sometimes something like this will happen. So sometimes price will push, it'll retrace, but it won't retrace to the actual zone and then it'll push up, right? And you're thinking, once it pushes up, right, there's a new supply here, right, or a new demand there. And you're thinking, oh, yeah, okay, price is going to pull back into this demand and keep pushing up. So what you're thinking is price is going to come here, give you some type of reversal pattern, and then push up, which sometimes it does. But there are also times where what price will do is it'll come, give you a fake chalk pattern because this is the low, the new low that was created, give you a fake chalk pattern, making you think price is going down trending, just so it can tap into this open zone that was left untested, and then it'll push. So it literally will just fake more people out than not by making people think, oh, this is because this is a protected low. Like, don't get me wrong. Based on what market, if price was to break here, this becomes a protected low. But if you don't leave open zones and understand, like, I only know this stuff from experience because I've been in so many trades where I'm like, holy crap, it literally snatched me out, tapped that open demand zone, and then continued in a direction to where now when I see it, um, where most times I set a buy or stop limit to enter as soon as it pushes. If I see it's an open zone beneath it, I actually manually enter. I will wait because if price is pushing very, very bullish and it's getting towards that low, I wait because I'm like, all right, I can already see what they're trying to do. They're trying to snatch everybody's liquidity who's under this protected low and make them think that the market is now changed to downtrending just so it could test this open zone and then push in the exact direction that everybody expected. You got to remember, there has to be somebody on the other side of every trade. So the big players do things like that. The banks, they make moves like this to trick everybody so that everybody else is on the other side of the move so they can take their money. If people aren't on the other side of the move, there's no money to be taken. Everybody's just on the same side. However, when they can trick people like this, they can get people on the other side of the move and then take liquidity in the way that they actually want it to go. But yeah, this is an example of things that happen. So this is another example. Yeah, where price will push, pull back, touch a zone that was left. So this is why even when price breaks structure, now if price was to come back and test this zone and then break, I would have gotten rid of this zone because once it's tested, I don't leave zones there. Once zones are tested or broken, I no longer leave them there. However, for zones that don't get tested, I do leave them there because I just, in my experience, I begin to notice that more times than not, at some point, it's not always immediately, it's not always the next day, it's not even always the next week. Most times, price somehow makes its way back to actually test that untested supply or demand. Um, so I like to leave them there as open supply and demands. But yeah, again, that was just an example. I just wanted to have a video of how I see the market. Some people might like it, some people don't like it. If there's any extra questions, you can put it in the comments. If you want a more in-depth detail about certain concepts that I've talked about and used, you can put that in the comments too, and I'll make even more in-depth detailed videos about those. But yeah, my chart is literally set up for the day. This is how it looks on my overall time frame. So I see the overall move, and then I see the minor leg that I'm trying to catch. Then I can go down to the 4 hour, and I see my overall move on this time frame. And I see that once it reaches in here, I'm actually looking to enter and catch a small leg of that trade. So, yeah, like I said, I like to keep it simple. It's not easy. It took me a long time to learn, and I learned a lot of things from experience. So, when I first got this edge, it wasn't like this. I was part of Swaggy's community for a very long time, and it helped me stick with it and get through it and learn a lot about the market itself. And once Swaggy went into, it wasn't the Gold Academy. I think it was I can't even remember. But once he introduced KJ and Lucas, they kind of helped me put it all together. But even this, this isn't exactly how Lucas is trade. I just took his concepts on market structure and supply and demand. And then as I've gotten more experienced and noticed certain things, I've added my own little flavor to it. Like before, I used to only go to the 4 hour and identify this 1 hour high, 1 hour low. In 1 hour, supply and demand, just trade that. But I started to learn more things, and that actually made me say, how about going a time frame up so I can at least understand why price might be pulling back, why price is likely to reverse once it tapped into this 4 hour supply and demand. Because before I wouldn't even have known that a 4 hour supply and demand was even there. So now that I know that, it helps me make better trading decisions, more high probability trading decisions, and also sit out on some decisions too. So this is just a way I view the market. I might do this again like in a few weeks with another pair because it's different with every pair. You know, this was a simple one that I see set up, and now I have this pair set up for tonight. So again, I'm done. I'm out. Hope